Well, development and store openings have been delayed. For example, Shape's Amazing Brentwood, our grand opening was planned for fall of 2020 and we had to push it to spring 2021. And then there was rent collection. We did a better job than a lot of landlords, but still our portfolio rent collection average was 70% April through July. And bankruptcies. We contended with 14 retail tenant bankruptcies. And bankruptcies will continue amongst retailers that fail to innovate and without strong online platforms. We are seeing Quebec-based manufactured retail continue to struggle. Staffing furloughs of real estate development teams and legal teams really are delaying process. Stores and malls are being redesigned to include click and collect and convenient return options. Then there's the growth of online shopping, which has doubled this year. But I should note, online sales are starting to slow as more shoppers return to bricks and mortar, and online sales still represent only 29 billion of the 600 billion in total Canadian retail sales, or about 5%.
COVID's affected our business in a number of ways. I think most importantly, it has made us appreciate what's important. First and foremost, it's reaffirmed our values as an organization and the kind of culture that we've tried to create here over time. With respect to those values, relationships are at the forefront, especially in a challenging market. The investment that we've made with our stakeholder groups, whether they be investors, our tenants, our lenders, even our staff internally, relationships are going to get us through at difficult times, and that's very apparent today. Other values that we have around being diligent, of course, even more important now than in the past when you're facing market changes and risks, having discipline, moderate leverage. Times like these, it really pays off when you've managed those risks going into a downturn. In terms of the community that we invest in, we've always been sensitive to that. Now more than ever, with health and safety, we're very attuned to the communities in which we operate, and the ambition that we take into projects. We are in a cycle, and I think this is kind of an interesting opportunity, an interesting point in one's career to be at the point of a market change. When there's volatility, there's certainly opportunity, and ambitious firms will be eager to move and find creative entrepreneurial ways to create value and build assets in this market environment. The second aspect of COVID and what we've taken away from it is that it reminds us the true building blocks of real estate, and particularly value-add real estate. The fundamentals of what we do day in and day out, the blocking and the tackling. As asset builders, we need to get the basics right. So focusing on NOI, focusing on cost management, working with tenants, understanding their business, reducing risks wherever we can see them coming, and just paying very close attention to property level operations. It's not rocket science, but it's the core of asset performance and something that we're very focused on right now in this market environment.
Our business and activities have been, significantly impacted by COVID, like everybody else, all of our companies and everybody in the world, of course. The normal things of lower productivity, issues of having to have people away from work, cohorting. Those things have all been challenges, but we've been working through it. So that's the operational concerns, and operational logistical issues that we have to figure out in terms of business activities. Certainly, like many others, we've just become a little bit more circumspect and taking a bit more time to make decisions, carefully watching our receivables, carefully watching the health and well-being of our tenants, both physically and financially, and just taking things a little bit slower. And apart from that, we sort of now are starting to feel, 7-8 months into this, that things are starting to. It's becoming being in an abnormal situation is becoming normal. and people are just sort of figuring out how to move ahead. And we're seeing a lot of people come back to their offices in spite of the risks that they have to manage, and traffic picking up, and lease volumes and lease renewal volumes picking up. So it's been weird for everybody, but it's becoming kind of, you hear it all the time, the new normal. There is kind of a new normal now.